You find something online. It costs $100. For a moment, your brain reacts to the full number. Then the checkout page changes the question. Not $100 today, just $25 now. The number gets smaller, the decision gets easier. And something strange happens. The price did not change. The product did not become cheaper. You did not suddenly have more money. But the purchase feels lighter. That is the quiet power of buy now, pay later. It does not make debt disappear. It makes debt stop feeling like debt. For most of modern financial history, borrowing money had a certain emotional weight. You knew when you were doing it. You applied for a loan, you opened a credit card, you signed paperwork, you talked to a bank, a store clerk, or a lender. Debt had a doorway, and you crossed it. But now, Pay Later removed the doorway. It placed debt inside the checkout page, right next to the button you were already going to press. That is why this story matters. Because shopping did not simply become easier. Shopping became a loan. The old version of delayed payment looked very different. For decades, stores offered layaway. The idea was simple. A customer could choose something they wanted, pay a little at a time, and pick it up when the payments were complete. Layaway was not glamorous, but it had one important feature. You did not take the item home yet. The delay was visible. You wanted the thing, but you had to wait. Modern buy now, pay later flipped that logic around. Instead of paying first and receiving later, you receive first and pay later. That reversal changes everything. Waiting used to be part of the cost. Now the wait is removed. The only thing delayed is the financial consequence. Installment buying is not new either. Furniture stores, car dealers, catalogs, and department stores have sold people things over time for generations. Credit cards made borrowing even more portable. They allowed people to carry a lender in their pocket, ready to turn a purchase into a balance. But even credit cards still felt like credit. They came with statements, interest rates, limits, minimum payments, a plastic card with a bank's name on it. Buy now, pay later learned to feel different. It borrowed the old ideas of installments, removed the old seriousness, and wrapped the whole thing in the language of ease. 4 easy payments, no interest if paid on time, instant approval, no hard credit check in many cases, pay later. The words are important. They do not sound like debt, they sound like flexibility. And flexibility feels good, especially at the exact moment a person is deciding whether to buy. This is the hidden mechanism. Buy now, pay later does not only finance purchases. It reframes prices. A $100 item becomes 4 payments of $25. A $200 cart becomes 50 today. A purchase that might have triggered hesitation becomes a smaller, softer number. The full price is still there. It has just been pushed into the future. The future feels abstract. Today feels real. And humans are much better at feeling today than feeling later. This is one reason the checkout page is such a powerful place to offer credit. By the time you see the payment options, you have already imagined owning the thing. You have chosen the color. You have checked the size. You have mentally moved it into your life. The hardest part for the seller is no longer desire. You already want it. The hard part is friction. And the full price creates friction. Buy now, pay later reduces it. It turns the question from, can I afford this purchase, into can I afford the first slice? Those are not the same question. But at checkout, they can't feel the same. That is how debt became a button. Not because people suddenly became irresponsible, because technology made it possible to place a lender at the exact point where desire is strongest and resistance is weakest. Behind the simple button is a business model. The customer sees convenience. The merchant sees a completed sale. The lender sees a new loan. In many buy now, pay later arrangements, the lender pays the merchant upfront, and the shopper repays the lender over time. The merchant may pay a fee because the option can help convert a hesitant shopper into a buyer. That is the part most people do not see. Buy now, pay later is not just a favor to the shopper. It is also a sales tool for the store. The smaller payment is not only a financial feature, it is a psychological feature. It changes the shape of hesitation. And the more invisible the borrowing feels, the more powerful the tool becomes. The Consumer Financial Protection Bureau has described the common version of this product as a form of credit, often structured around 4 installments, with the first payment due at checkout and the rest due later. That description sounds simple, and in some cases, it is simple. If a person understands the payments, has the money to coming in, and pays on time, the product may work exactly as advertised. But the danger is not always inside one purchase. The danger is in repetition. One small payment feels harmless, then another, then another. Each purchase has its own little schedule. Each one feels separate. A pair of shoes here, a kitchen item there, a gift, a grocery order, a phone accessory. Nothing looks dramatic by itself, but the calendar begins to fill with tiny promises. This is where buy now, pay later becomes different from normal spending. A normal purchase ends at checkout. A buy now, pay later purchase follows you home. It creates a future version of you who already owes money for something the present version of you already received. That future version may have rent due, or a utility bill, or a medical expense, or less income than expected, but the payment still arrives. Many of these services rely on automatic repayment. Autopay makes the product feel clean and effortless. It also means the payment can compete silently with everything else in your account. A missed payment may not feel possible when you click the button. It feels possible later, when the paycheck is smaller, the balance is lower, and 3 different small payments are trying to leave at once. This is why small debt can be psychologically dangerous. Large debt scares people. Small debt slips past them. A mortgage feels serious. A car loan feels serious. Even a credit card balance can feel serious when the statement arrives, but a few small installments can feel like background noise. This is the trap. The system wins because each individual decision feels too small to matter. Regulators have worried about this for a reason. The CFPB has pointed to possible risks around autopay, data-driven marketing, and borrower overextension. Researchers have also found examples of people using credit cards to pay buy now, pay later obligations, which can turn an interest-free installment into higher cost resolving debt. That is a strange financial loop. Debt used to buy something, then another debt used to pay the first debt. The original checkout still looks clean, but underneath it, the obligation has moved. This is why the phrase free money is so tempting and so misleading. Buy now, pay later can feel free because the first moment is cheap. It can feel free because there may be no interest if paid on time. It can feel free because approval is fast. It can feel free because there's no long application. But free money does not ask to be repaid. Buy now, pay later does. The cost may not always be interest. Sometimes the cost is a late fee. Sometimes it is an overdraft. Sometimes it is a credit card balance used to cover the installment. Sometimes it is the mental load of tracking many small obligations. And sometimes the cost is simply buying more than you would have bought if the full price had stayed visible. Buy now, pay later does not need to trick everyone. It only needs to change the decision at the margin. The person who almost closed the tab. The person who paused at the price. The person who thought, maybe not today. Then saw a smaller number. The purchase becomes easier not because the person is foolish, but because the system has changed the moment of pain. Payment pain is real. Cash makes loss visible. A card makes it quieter. A subscription makes it recurring. Buy now, pay later does something more specific. It breaks the pain into pieces and hides most of them in the future. That is why it feels different from normal debt. It does not begin with a warning. It begins with permission. Yes, you can have this now. Yes, you can pay less today. Yes, this is easy. Yes, this is normal. And once enough stores offer it, the option stops feeling unusual. It becomes part of shopping. This may be the biggest change. Debt used to interrupt the purchase. Now it completes the purchase. It no longer says, come, borrow money. It says, continue. That word is powerful because at checkout, people do not want a financial lesson. They want the process to continue. The deepest reversal is that buy now, pay later did not invent consumer debt. It made consumer debt feel smaller, faster, and more ordinary. It took an old financial idea, installment credit, and gave it the emotional design of a modern app. No waiting room, no serious conversation, no heavy paperwork. No feeling that you are entering debt, just a clean button. A smaller number, and a promise from your future self. That is why it can be useful, and that is why it can be dangerous. The same feature that helps someone manage a temporary expense can also help someone ignore the real size of their obligations. The same button that makes a purchase possible can make a purchase too easy. The same payment plan that feels harmless once can become stressful when repeated. The problem is not that every person who uses buy now, pay later is making a mistake. The problem is that the product is designed to make debt feel unlike itself. It does not look like a loan. It doesn't sound like a loan. It doesn't interrupt the checkout like a loan. But it still reaches into the future and claims part of your money before you get there. That is the debt that does not feel like that. And maybe that is what makes it so powerful. The most dangerous financial products are not always the ones that look frightening. Sometimes they are the ones that look helpful, the ones that arrive quietly, the ones that make the number smaller, the ones that ask for almost nothing today, and then come back later to collect the rest. If this changed how you see modern money, Watch the next video on how sports became a casino. Because the easier money becomes to spend, the harder it becomes to feel what you have already promised away. Subscribe for more videos that explain the hidden systems behind money, business, and modern life.